All right. Let me make sure Discord's up. Cool. I believe we are up. All right, cool. Welcome back, everybody. My name is Spencer Riegle. I am the Chief Crypto Options Trader and Strategist at DARMA Capital Trading. We are DARMA Capital Trading, and we hop on each week to talk markets. And so markets predominantly that we cover pretty much all of them, but the most active in which we are in is Bitcoin and Ethereum markets. And so what we do each week in kind of the stream is talk about correlations, talk about macro events, talk about kind of the top-down approach, and then we get into kind of a weekly outlook, right? And so if you want to reach out to me, feel free to reach out to me at X @_RIEGLE. So that's just my last name. And then LinkedIn, Spencer Riegle. So just my full name. I'm pretty active on both, so feel free to reach out, and I'll get back to you as soon as I can. So without further ado, let's kind of hop into disclosures. So all information and presentations are for education purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors, right? And so what we like to talk about and start each week off with is do not trade any capital in which we deem to be outside of risk capital, right? And what is risk capital? Risk capital is if that capital is going to impact your decision in terms of buying groceries at the end of the week or paying your bills at the end of the month or at the beginning of the month, that's not risk capital, right? And you should not be trading with that capital. You should be using that to pay your bills, right? And to buy your groceries, right? And there's a couple of reasons for that. One is if psychologically, if you're focused on groceries, focused on bills, you're not thinking about trading logically. And then two is it just doesn't make a lot of sense in terms of risk reward, right? And so at the foundation of everything we do, everything is risk reward based. So that's kind of the disclosure for the week. Let's do some kind of house cleaning. So if, let me see if I can actually pull this up. Yeah, so we like to start each session out kind of going forward is we launched a new website. So dharmacapital.trade, feel free to go check it out. And I think you should. And let us know what you think, right? And so you can do that in Discord. You can do that in the YouTube comments. But it's basically about us, kind of what we represent, what we do, and then a ton of information on everything in which we do, right? There's also free stuff. Everybody loves free stuff. So if you go to the sign up page and you go for register, we're basically giving out 2-week free trials on everything in which we offer. And if you ask questions in the Discord as well, we can see what we can do. So feel free to check it out. And we're pretty excited about the rollout of that website. So let's get started. If anybody has been trading in the last 7 days since we hopped on last, normally we go over kind of the macro events, and there has been enough for essentially a year in the last 7 days, right? And so if you haven't tuned in, the escalations in the trade war have skyrocketed, right? And basically the Trump administration has pledged a full-out trade war against basically everybody in the world at this particular point in time, right? It started and escalated at the beginning of kind of the Trump administration with some of our largest, and I say our, I am based in the U.S., some of our largest trading partners in terms of, and closest neighbors in terms of Canada and Mexico, but has branched out, right? And some of those inaugural, basically Liberation Day that he coined so much on April 2nd, was China at the top of the list, right, with 34% tariffs, and then it basically covered around 60 countries, right? And so what that has created is an immense amount of chaos in global markets, right? And after quote-unquote Liberation Day, right, we have seen mass selling across the board, right? And so as we enter kind of the macro landscape, right? Last night on the Futures Open, the NASDAQ was down over 5% again, and closed the day, right, on Friday down over 5%. The S&P 500 futures, right, the ES, they were down about 4%. Hong Kong was off significantly. Taiwan was off significantly. Germany, UK, name it, basically everybody was off in a large way. Currency markets have been largely disrupted. Interest rate markets, while fairly intact, are a bit interesting as well, and there's some movement there. Basically, all I'm trying to say is there's been a large movement of capital on the back of all of this uncertainty, right? And so economists, whoever you favor, and I'm not going to pretend to be one, are calling for, if these were to remain intact, a recession, and potentially a global recession. And so with the S&P kind of priced where it was, and we've kind of mentioned this throughout the last few sessions, it was almost priced to perfection of a boom, right, on the Trump administration stepping into office. Obviously, what they believe in, which they are doing, is bettering the economy, bringing back manufacturing jobs, bringing back jobs broadly. But what they're doing is shaking the tree, right? And that's kind of the metaphor that we've spoken about each week. And part of that, right, is when we think about assets and we think about anything that has basically a fiat basement, is volatility, right? And so only one thing is fairly certain, is the initiation and the friction of these events is volatile, right? And so we are seeing the unhinging nature of kind of all of these policy being passed at such a rapid pace, and we are seeing it in a very quick manner, right? And so the S&P 500 from the highs is, I think we were down over 20%. NASDAQ is down more. Bitcoin is surprisingly down not as much, right? I believe we touched in the 30 or close to 30% drawdowns from those 108, 109 highs, which I've been involved in crypto markets and downturns for 7 years now, and I'm surprised. I'm surprised at the stability that Bitcoin is having, right? Ethereum is a different case, and we'll kind of talk about that, and we have talked about that in previous sessions, but largely it's just a bunch of chaos, right? And so as we navigate the markets, there's a couple things to think about. April 2nd, the United States came out and they said these are going to be the maximum tariffs, right? Nobody knows, right? And why I say nobody knows is because if you saw the close on Friday in the U.S. session on Friday, it started the session Friday with China coming back with reciprocal, which is the fun term that's being tossed around now, with reciprocal tariffs to match the additional reciprocal tariffs of the U.S. of 34%. Not only did they say that, about 30 minutes after the close of the futures close on Friday, they came back and said no deal on TikTok until you move the tariffs, right? Which is interesting because that is not a stance of willingness to come to the table for negotiations. And what it seems as if the U.S. administration is doing is looking for negotiations, right? And while they're saying it's not, they are also kind of towing the line, right? And so that was not a positive way to end the close on Friday, and risk markets sold off because of that and couldn't catch a bid. Over the weekend, there wasn't really anything substantial except out of Trump on Truth Social, and then some remarks as he was stepping onto Air Force One, basically stating that his policy would never change, right? And so no signs of any backing down, and he was actually pressuring the U.S. Federal Reserve to lower interest rates, right? In which Jerome Powell came out on Friday and said that they were going to remain data-driven, right? And those weren't the exact terms, but he's basically saying that absolutely the tariffs that were put into place, and if they were to follow and go into place on the deadlines, would create large inflationary shocks in the U.S. in the short term, and also potentially create growth problems. And so the U.S. Federal Reserve is monitoring the situation, but did not seem as if they were going to play ball and get pressured by the Trump administration, right? And so that's not positive for markets, as the Fed put seems to be out of play, right? And so all of this theory, all of this speculating is why global markets basically limited down almost across the board last night. And so as we head into the week, that's kind of the backdrop, that's the macro. And there are some things in which we need to think about and talk about. One is absolutely, until there's a resolution, the timing of this escalation, if this continues to prolong, it absolutely is going to weigh on the economy, right? And timing tends to matter in these types of things. As companies start to bleed, they may see cracks initially in the short term, but they won't break until later on, right? And breaking later on just means that if there's not a rapid resolution, or if there isn't a resolution that at least creates guidance and a path for business to operate in the next quarter, then it is going to create a lot of chaos and potentially could see further weakening in equity markets as companies shore up capital to basically save themselves, right? Inversely, right, if the narrative is that these are the worst in which they're going to get, and the U.S. administration seems to take a step back, right, then that could be seen to be positive, right? As positive steps forward into a potential resolution, right? Markets are forward-looking, they're forward pricing, and they oftentimes, in moments of chaos, price the worst rapidly, right? And so if that is the case, then those prices are potentially in, and that means any resolution, even if it is not perfect, will have a positive impact on asset prices. One thing is for certain, or seemingly to be certain, is the volatility in the short term is likely here to stay. And that means 30 days in, 7-day weeklies, 0 DTEs, those kind of options and that optionality and that term likely remains volatile. And we've seen it in crypto. And I haven't pulled up any of the shorter dated expirations, but I did pull up the VIX and the VIX futures, and we have been seeing a rapid climb in the VIX, right, which is the 30-day implied vol of the S&P 500. So without further ado, that's kind of the macro backdrop. Let's take a look at markets. There's a lot of things in which we need to talk about. There's a lot of things in which just purely operating in these markets might not be widely known because there's a lot of moving under the hood as well. So let's pull up what we talk about each week, and that is our weekly price map, right? And weekly price map is our proprietary data, right? So if you have any questions, make sure to visit our website or ask questions in the Discord. I'm more than happy to answer those for you. And then on your right is Bookmap, right? And so what we do each week is, we absolutely talk about the macro, and macro a lot of the times is theory when we are talking about trading, and when we are talking about markets that are so volatile as these are and so correlated to basically headlines. It is always important to understand not only the macro outlook, but also more of the micro outlook to operate, right? So to start the week, right, we start our week Saturday 0 UTC. For those that are familiar, you would know that. And we always start out at the directional in terms of what we're looking at, right? And so where do we open up? 83,429. Anything under the directional is seen to be negative, right? That green level here is important. That's where we see, that is our sentiment bias on the market, right? And if it's over the market directional, then we have a negative sentiment bias on the duration. And if it's under the directional, then we have a positive sentiment bias on the duration until that level is broke, right? But the expectation is if a market is performing to perfection, which we like to operate in perfect markets, then the green level, either it be higher or lower, should hold. And that's how we kind of structure our trade. So looking at the directional, a trade under the directional is negative. In combination with that green level up there being negative, we have a negative outlook, right? Where's the target in which that's going to go? 83,429. If it can't hold, breaks down to this DP, right? 79,000, right? That's psychologically an important number because we traded roughly around here as our previous, I can actually pull it up, previous month's low was right in at that 76,400. So front runners that want to buy in front of that are looking to buy the dip, that's an important level to look at. If we can't hold there, which this, to be clear, was yesterday's session into the open last night. The open was here, and then overnight was here. We based here, and we had a shot into the equities open to really scale back. However, we couldn't do it, right? And so anything under 79, the expectation is that we trade lower, right? Where do we trade? DP down to the DT1. We call this to be a sell DIR breakout, right, on a weekly basis. That targets what we see as an APMD, two APMDs. Two APMDs you can see if I show the majors, right? Directional, one APMD, two APMDs, right? And so that's the expectation of a full rotation lower. It was supported last night and into the regular session. That is a level to buy, right, if it's supported. And where does it go? First, it's got to target the previous month's low. That psychologically, as we just talked about, is an important figure and an important level in markets. As rebalancing is done, delta hedging is done, allocations are done. There's a lot of different things and why that's important. But a base over the previous month's low targets the DP once again, right? And so you can see the market kind of move in these ladders, right? And so as it goes up here during the regular session, this actually quick move higher was what was on a rumor that the White House was going to pause 90 days, and then the EU was coming back and saying, look, we're open to negotiations. And immediately markets priced significantly higher in seconds, and you can see that in the S&P 500, the NASDAQ, all across the board. And since then, we targeted it to the tick, the previous week's low, which is really interesting, how kind of markets move like that. And then we've been kind of basing around this DP, right? Anything under 79 isn't exactly positive, right? We have to base over 79, otherwise we're at risk of a rotation right back down. However, a base over 79 going into the rest of the week is positive, right? And where does that go? Well, it likely is on the back of some positive news, right? Some macro events, because markets currently are correlated to the news in a significant way. So that potentially is on some positive resolutions, maybe a de-escalation out of China and the US, maybe it's some resolutions out of the EU. That would target immediately back to this previous week's low, but particularly right back to that 83,400 for what is to be a full round trip, rotation lower, rotation higher, basically a nothing on the week. And then has the real potential, if we do get back to here, depending on the news cycle, markets are beaten down, right? And so the fact that Bitcoin is held relatively is kind of interesting to monitor and watch, right? And so if we do get a base over 79, I'd be afraid to short this thing and get in front of it, right? And that is because if any resolution or any turning point in kind of risk, right, the way in which Bitcoin has been trading, it's been strong. It's been relatively strong, right? And it's not prudent to short strength or markets that are showing strength. So until we can get over the 79, the expectation is we rotate lower down to 74. And let's talk about the bear case here. A full rotation here, right? So this is a 2 APMD move up or down, a 1 APMD move up, right? If we can't base over 79, we target 74, 75 again. And if we can't base there, the expectation for the bear case is down to 71, right? That would be your full 2 down, 1 up, 2 down, right? At 70, 80, that would be an interesting level to start monitoring for holds and for bids in the market, right? For potentially a solid low going into potentially a sharp bear market rally in larger kind of correlated to risk, right? And so let's take a look at Bookmap, see where that resting liquidity is, see where those cash buyers are potentially sitting. This is the perpetual market, right? So it is important to somewhat take it with a grain of salt. Reason for that is these aren't always cash buyers, but these are buyers on leverage potentially, right? We don't actually know if they're going 1-to-1 or if they're going 50-to-1. However, resting liquidity in the book is a willing buyer, and that always needs to be respected regardless of kind of the outcome, right? And so if we kind of scale back here, where is that resting liquidity? 77. You have about 500 that just flashed off, right? So see if somebody flashes again or if it repopulates somewhere. 76 or 77,600 is some resting liquidity, which is basically on these recent lows down here. And then you have bands of liquidity that are kind of just stretched down here at 76 down to 75.5. And that would be basically rebuying these lows, right? Which would be kind of that previous month's low down to that DT1, right? For us and how we're looking at it, if we can't hold 79, there's no reason to really press along. There's a reason to think about hedging. And then there's also a reason to think about what if 75 can't hold and these buyers kind of just get eliminated down here. Outside of that, let's take a broader step back to see where that larger liquidity is resting for that bear case that we kind of were talking about. Again, you have resting bids here of 73,500, which is kind of in the middle there. That's not really in correlation to anything that we are monitoring. However, it is fairly significant size. It's about 1,000 coin. That is something to monitor on a microstructure level. And then 70 down to 68.5, which is right under this DT2, right? And so a couple different scenarios to talk about. One is we are in an emotional market. And so liquidations, leverage, positioning oftentimes gets caught off sides when we are moving in which the way we are moving, right? So while the expectation is that these levels hold to the tick, if they are not holding to the tick and they start to, let's say, trade around that 73,500 and then base back over here, that's really the signal to start to re-enter, right? Just because there's a willing buyer at 73,500, we don't see the structure alignment until down here at 71. And so if they want to buy at 73,500, that is great. However, the moment we're down at 71, they're underwater, right? So the alignment across the board in terms of looking at just the resting liquidity, but also looking at the alignment with price map matters here, right? And so to the upside, let's talk about the upside. The expectation on a lid for the week would be 87. That's a good strike. That's a good area to start to look at to lighten up longs if we wind up getting there. However, we do have a lot of structure to rebuild in markets, right? 83 is a resting offer in Bookmap. That's in direct alignment with kind of what we see here at 83,500, which is anybody that bought off the opens underwater. Makes sense that there's resting offers there, right? Above that, the book on the offer is light. So continue to monitor it, but there isn't a lot to talk about in terms of that. The only thing is the resting liquidity is 83, 84. It's basically just an alignment here, right? All right, so that's Bitcoin. Let's hop over to Ethereum. Ethereum is a different beast. We've kind of talked about it previously on different streams, but Bitcoin's narrative seems to be relatively clear, right? There's an administration that is positive behind it. There is currency problems, right? Volatility across the board. What do you buy? Gold. Gold's all-time highs. What do you buy? Bonds. Okay. But Bitcoin, for some reason, has continuously held a bid relative to the rest of the market. Ethereum, on the other hand, has not, right? And so Ethereum has gotten crushed. Again, weekly directional, right down to the DT1, right? And so this is these smaller levels here, the CR minus, CRX minus, those are half APMDs. We just kind of have those on there to understand more of a microstructure overlay of risk. But let's just talk about the majors here, right? And so talk in terms of APMDs. APMD is average price map distance, right? So that's kind of what the expectation is for the market giving on that duration, right? And so you can think of it kind of in a ladder. The green level over the directional is not positive. That is a negative sentiment bias. And the fact that we broke down from the directional signals that that negative sentiment bias is valid. And so where did we go? DP, right down to the DT1. Again, just like that. Ethereum's been operating weaker, so some outperformance to the downside would be normal. However, let's pull this up. I got Bookmap on the right. 1600 is that figure for the upside here. Very similar correlation in markets to Bitcoin that we just talked about. If Ethereum really comes up here, tests 1600 and fades it, it's not positive, right? Where does it go? 1400 again. And the what if bear scenario is down to 1200. Down to 1200. And if it really were to get going, it would be 900. But there's better alignment down at 1200 on some larger time frames. So that would be the expectation for a bear case scenario for the week. On the bull case scenario, we got a lot to work back here. 1600 needs to hold, and if it holds, 1800 is in play, right? But that previous week's low is right in front of it, 1750. So any weakness at 1750 all the way up to 1800 needs to be monitored for potential fades. Otherwise, a base over 1800, this market can really get going again, and it targets 2000 to 2200. On Bookmap, where we've seen the resting liquidity, 1100 to 1000, right? A quick wick down here and a reversion back to 1200. Those are all positive signs, right? And so, or liquidity that steps in front, that's willing to front run, that sets up with this alignment down here, also a positive sign. So there's a couple things that I want to talk about as kind of everyone is navigating markets this week. Is I'd like to talk about volatility because it's not always easily understood, right? And so if anybody's trading options, and this goes for any market, right? Whether you're trading the S&P 500, whether you're trading the NASDAQ, whether you're trading Bitcoin, whether you're trading literally rocks, right, that has a vol product correlated to it. Let's pull up, let's pull up some of these volatility markets just to talk about. So one thing to talk about is, we'll talk about the vol term, right? And so What is the vol term? Basically, vol term will tell you the at-the-money IV, which is the at-the-money implied volatility for the duration, right? And so I pulled up Ethereum just because Ethereum's implied market has been fairly active. And it's really interesting to start looking at, right? And so you can see that the at-the-money April 9s are around 106 vol, right? That, if we were to pull up the April 9s, basically prices your straddle, right? Your straddle here, let's do this the 75s because you got your you have your price here right at 75, straddling the 75s, right? So if you buy the offer, the 43 by 44, right? And we can actually model this just so that we can talk about it and we can talk theories. Let's go April 9s and let's buy the 1575s. Let's do 100 of the calls and then we'll buy 100 of the puts, right? And so for those that are unfamiliar with straddling, straddling is buying the at-the-money call and put, right? You buy them 1-to-1, so 100 on the call, 100 on the put, and basically it gives you this exposure to the market, right? And this exposure is long volatility, right? What I want to talk about here is vol of vol, right? And it's a very abstract concept and it gets more complex and in the rabbit hole. But basically, when volatility is high, just getting the direction right in your calls or in your puts doesn't always mean you're going to profit, right? And so let's run through some scenarios, right? So we're talking about 109 implied vol, right? And historically, we can actually pull up, and I've been kind of looking at some of this. Let me pull this up as a different tab next to it, right? And so we can see, let's pull up 1-day vol, right? So you can see the heightened, basically, the heightened price and in the implied market and what it is in relation to kind of what we've seen, right? So let me take off the 70. To start the day, we were at around 130, 120 implied vol, right? So absolutely, it makes sense. Yeah, the market's getting beat down. Why not just buy some calls? And what's the cheapest way to do it? Well, you can get some cheap optionality in the front end, right? And when I say front end, I mean 0 DTEs. It's not always right? Everything is in relation to volatility, right? And kind of what the market's already priced in. So just blindly buying these calls and these puts is a recipe for disaster, right? And so let's go through a scenario. So let's just kind of throw out a rough average here. So let's say the implied vol, let's kind of go to the upper end here and just say a 74 implied vol for your 1-day options, right? Which is a fan favorite. Everybody loves to trade the 0 DTEs and kind of play the lottery game, right? So let's kind of give it the benefit of the doubt and go, what is this number? 76, yeah, you can see here, which is kind of on the upper end. We're really giving it the benefit of the doubt. So right now, these are priced at 109 implied vol, right? So let's drop it by 30%. To kind of play a scenario that would have be in line with those recent kind of upper end of volatility. You'll notice immediately that position is down about 1.5%, right? Or 1.5 coin relative to 100 coin straddle, right? Not only that, 1,500 all the way out to 1,650 is where you just break even, right? And as the time goes by, which it will rapidly in these 0 DTEs and these 1-day options, you start to see a significant decrease in the premiums, right? So all I'm kind of trying to say here is volatility at this particular point in time is going to be very important. Vol of vol matters, and vol of vol is just how much volatility is trading, how much it's adjusting, how volatile volatility is. It sounds crazy, I know. So for those that are kind of interested, check out Greeks Live. They have a very interesting tool. You can kind of go back and see different term structures. What we're currently in is what's considered to be a backwardated vol term. That just means the front end vol is higher than the back end vol. And what we likely see is across the full term, you can see on a 1 month basis, it's up about 4% all the way out in the yearly. And then you can see the 1 day is up significantly, right? And so this kind of creates that curve higher, right? And so what you need to monitor if you're making directional bets in outright calls, outright puts, is that volatility number, right? It's one thing to nail the direction. It's very frustrating to nail the direction and still miss the payout, right? And so volatility really matters at this time. Another thing is skew matters, right? So skew has been incredibly sold. That means puts are more in favor as market participants hedged their portfolios, right? So they're buyers of downside protection in the form of puts. They're sellers of the calls, right? And so you get this bid up in terms of volatility on the downside. That shifting in skew will benefit the puts and not negatively hurt your calls, right? And so as these two kind of phenomena shift around, vol, skew, make sure to be aware as you're kind of navigating these durations. So that is the outlook for the week. I know it wasn't, we've kind of been keeping it short, but if you have any questions, feel free to ask them. I'm going to open it up in the Discord for anybody that has questions. And then if not, we'll just kind of wrap it up and good luck with the week. All right, so the question is, when trading volatility, how do you manage your trades? As in, how do you pick where to put your stops, take profits, etc.? Yeah, so how we do it is, a lot of it's situational. I've been in options markets for quite some time now. However, there's a couple different things in which we think about, right? And so a market that's down this much, right? And all of a sudden you get this raising in the volatility term, right, in the front end. Having duration, right? So let's say, I don't know, maybe you have some 6-month duration calls, right? Right. And all of a sudden now you're benefiting in the form of volatilities going higher, even if the direction isn't right, right? Which is super interesting in options to think about. Sell some things in front of it, right? To keep it super simple, options you can just trade similar to futures. If you're just in outright calls, outright puts, the best opportunities in terms of the long outright position is when you're taking a stance on volatility, right? And so when I think about volatility, I just think of range, right? And so what's the range on the day? What's the range on the week? What's the expectation for the range? And that really gives you some ideas when you're thinking about all these options, right? So I'm usually a fan of selling vol, as vol tends to be overpriced. It's implied. Market is typically overpriced to its realized market, right? And so there's a couple different reasons for that. One is in indices, right? There's natural buyers of downside protection. In crypto markets, there's actually natural buyers of upside tails, which is really interesting. So you get, normally in crypto markets that are not just getting crushed, you get a contango vol market, right? So you can do some really interesting trades, right? So a fun one is if you own the underlying, you can put on a ratio call spread at credits when call skew is high. And that basically hedges out some of your risk, but it also opens up some optimal areas for you to benefit. And then it also brings in income for the portfolio, right? And so I can actually, let's put some of those on just to kind of talk through it, because I know options are complex. So a lot of the times when I was learning about options, it's always best to kind of see how they look. So let's go through and let's talk about kind of some applications here, right? And so specifically here, let's say you own 100 Ethereum, right? And we'll kind of create this portfolio, which is fun. And it's always best to kind of, if you're unfamiliar with options, do it in covered formats, right? So if you own 100 Ethereum and you want to sell calls against it, there's some fun ways to do it that are not just as simple as selling cover calls, right? So let's take a stance on vol, right? So the market just broke down to what, 1400. We rallied 200 points. Let's theoretically say 1600 is going to be a roof, right? And we can take a stance on vol. If that's the case, then where do I want to take that stance? Well, I own Ethereum, so I benefit if the market goes higher, but I'm also looking to take some income in the form of premium sold, right? And so how can I do that? Well, I'll go out here and let's say I buy the 2000 Mays and I'll buy 100 of those, and let's see what I can get out here for the 2200s. And I'll sell 200 of these, which is a 1/2 ratio call spread. And you can see that I actually remain long. I get this, see how I get this slight credit here? You can actually bring it in a bit. And you could do a 2000 by 2100, but different times and place for those. I remain long the underlying, and I remain long the market in terms of dollars, but I get this enhancement in this range here, right? And so that would just be a benefit to the P&L. When I think about stop losses, I think about this, right? This structure, if you see it, is negative gamma, right? That green line sloping off to the right, that means that it will negatively impact. I'm not terribly concerned about that if I'm doing this in a covered format, and depending on my kind of goals for the position, I'm not terribly concerned about that if I'm okay with being basically called away at 2400, which in dollar terms just means I lose the opportunity over that area, right? Over that 2200 area. I'm okay with that because that would basically be what? A 1600, and we'll kind of give it the benefit of the doubt, divided by 1600, a 37.5% increase in the underlying in basically what, 60 days. That's a pretty good return. So those are interesting ways to think about it. But if I were directionally trading this and just saying, look, I don't want the risk, I'm covering over 1600, right? So I'm looking to fade it similarly as I would fade futures, right? So if I'm selling calls, those carry a negative delta, right? I would be selling those 1600 if it fails, right? And if we hold the 1600, you just got to buy them back. Look to sell them higher. That's all it is. I don't know if that that kind of helps, but Options, I believe options are far more of a superior product just because they allow you to kind of bet and structure positions on a full price distribution versus kind of just at the current market price. Another way to do it is you can actively delta hedge against them, which is interesting to do as well. Yeah, and maybe yeah, if you're fairly new to options, the you can actually, I think, let me see real quick. We give our education out for free. So head over to Trader Assessment and Education, and there is an options portion in there for you to take a look at. So feel free to take a look at that. Also, we can talk options all day in the Discord as well. And so, yes, absolutely. In terms of volatility and what you're saying here, I'm hearing you're saying risk is essentially priced into your trade. Yes, absolutely, right? And so market makers are going to price volatility based on the expectation of range, right? And vol is basically this variance of the underlying asset, right? And so how much does it trade relative to a mean? And that kind of gives you this large band of probabilities around the underlying price, right? And us as traders can go in and buy and sell those underlying probabilities, and that is the form of buying options and selling options. There's a lot of unique and cool strategies to do around it. But if you're very new to them, check it out, the free education. And if you can't get the free education, let me know and I'll get you in there. And then, yeah, and then we can kind of just talk about them if you ever have any questions. So. Options, options can be a bit complex, but they once you get the hang of them, they're very interesting and very helpful when you are building a portfolio. So awesome, yeah. Enjoy the week. I'll be around, so if you can't get the education, feel free to reach out, and then good luck.